On the indexed annuity side, we recently achieved record sales, which is phenomenal because we're facing a very, very low interest rate environment, historically one of the worst interest rate environments we've ever seen in this industry. But we also have the recent gains in the S&P 500 and other market indices, which would lead people to believe that sales would increase for those equities products and decline on fixed or fixed indexed annuities. Not the case. We achieved record sales in one of the most challenging environments ever in the indexed annuity industry, and we hit $9.2 billion just for the second quarter of 2013 alone. A lot of people are saying, well, why is that? You know, what's lending to those record sales? A big part of that, quite honestly, is that we have new and expanding distributions in the indexed annuity industry, where this historically has been a product that's been distributed 80 to 90% by independent insurance agents and the marketing organizations and brokerage general agencies that they contract through. Now we have banks, broker-dealers, and wirehouses that are looking at index annuities as a viable product for their customers, and that's a really good thing. We don't want to have the perception that this is just a FMO product. This is a product that is probably good for most every American's portfolio. That's not saying everybody should own an index annuity or everybody should put 100% of their assets into an indexed annuity, but certainly everybody should know what an indexed annuity is and have the choice of making that as their product selection for their retirement if they feel it's appropriate. And I think that having these new distributions interested in indexed annuities and now selling them is going to help us get that in front of more consumers so they're educated and able to make an informed decision for themselves. So very, very excited about the indexed annuity market. On the index life side, things are also very exciting. In 2005, we had 12 different companies offering index life insurance products. Today I have 48 companies offering that product, and there's slated to be a couple more entrants just before the close of this year. It's a lot different story than on the indexed annuity side. We really haven't faced a lot of the challenges that have marred the image of the indexed annuity over on the index life insurance side. But it has its challenges nonetheless. I will say that this has become a very attractive product to a lot of insurance companies that are facing those historical fixed low rates and making their traditional universal life products look less attractive than they ever have been. And on the same side, there's a lot of those companies who maybe don't want to increase their VUL sales or don't have any interest in entering the variable UL space. So an index product is a great solution for these carriers. And there are agents who have never heard about this product who are now saying, you know what, there's a lot of people selling this. Something must be good about this product. I need to know about it. So can you help me learn? And I think that's an exciting time. You know, index life has existed for 15 years, but just within the past 2 years, are we really getting liftoff on this viable product and getting buy-in from people that are saying, this is no longer niche. This is a legitimate product that most every advisor should at least consider for their portfolio of the clients that they're speaking with. So I think it's a great time to be in the index life and index annuity markets.